Hello, everyone. This is Teddy Kekstadt from Forex Trading Unlocked, and we are here for a Forex market breakdown for you today. And real quick, we just want to show you our disclaimer from Forex Trading Unlocked, which just lets you know that this is for illustrative purposes, this webinar. It also here is the Nadex disclaimer on our sponsor for this webinar for today. So look at that real quick. And here we go. Let's start off, and we are going to look at the economic calendar. So today we have, for the US dollar, we have housing starts, and we have the EIA crude oil stocks number, which is later this afternoon. So that's one. It's not coming out until after most of the trading day has run its course. Then we have, for the euro, we have CPI, construction output, and there's also a 30-year German bond auction, which even though that has to do with Germany, that's one of the biggest influencers for EU, so that's definitely going to have some impact, I would think, on the euro, US dollar, perhaps. And then we have the for the pound, we have retail price index and PPI. Tomorrow we have for US dollar, we have the normal jobless claims, and we have the beginning of 2 days of Fed speeches, which I think are going to be more just reinforcing what the Fed chairman had said to both the Senate and the House last week. We also have, for the pound, retail sales tomorrow. And then, like I said, we have the speeches on Friday. So for these numbers, I would say that they are very relevant in the sense that these are the first inklings that we can use to see, as now that we are at midsummer, what is going on with the economies in these different zones. The euro and the pound being the biggest weights in the US dollar against the dollar and the dollar index. So it's very important to see how these numbers come in line or don't come in line, because we're starting to see some inklings of divergence, and we're going to get into that in the charts in just a second. So real quick, these numbers here, they're economic numbers, and some of them are also reflective of what the Fed may do as far as with interest rates, which is a currency variable. So with that, let's go on to our first chart. We're going to look at the euro US dollar. So right now there's been a lot of talk about weakening or potential weakening of the US dollar through influences through the Federal Reserve. We know that the rate cut is definitely on the table for either if not the next meeting, probably within the next 2 meetings. So US dollar weakness has been on the table now, and as you can see, the euro US dollar has been trending lower for the past month, basically. Now, it's been in a sideways range trade for 5 months now, and since the end of May, beginning of June, it's actually in a short-term bullish trend. However, we've had the past month where we've had this corrective slide. So what's going to happen now? Now, right now, we have this US dollar weight that we're wondering about, and if that is the case, and US dollar weakness is going to start to prevail, then we're going to probably see the euro US dollar gravitate towards this lower target range here. However, one thing I want you to notice here are our big pivots here, these yellow lines here. We have $1.1286, which is off of this recent lower move high from last week. And then we also have this low down here at 111.81. Now, this is only a $1 range here. Now, look at the bulk of the trading for this market, except for this little pop up here, has been within these 2 pivots right here. So even though we have a bullish breakout area over here, which comes in where we have this downward sloping resistance, this is obviously would be a bullish breakout area, because it would be continuing the bullish trend, and it would mean that this corrective move lower is definitely confirmed to be over. So this pivot right here, this high, would be the key level to cross at 112.86. And then we also have down here this target range, which would be for this current bearish move that we've had, because right now we went off this high, we made this low, which was a higher move low, but then we made this lower move high. So the question is, are we at a pivotal point for the euro US dollar, or we could also be in a period where we're coming into over the next couple of weeks where we stay within these 2 pivot points right here. Reason being is that if we come down into this target range, that still keeps it in a corrective phase. Doesn't necessarily take the overall bullish trend or the intermediate over the last few months off the table. But what it does do is it keeps it down in this lower part of the range where it has been for the longer term. I don't think it's going to get beaten up. I think what we are going to see really, unless those numbers, now here we had today, we mentioned the for the euro, the June auto sales slumped. That was something that was is giving inklings that the Eurozone is starting to or may see a further slowdown in their economy. However, though, we had their CPI rise and beat expectations. So the two numbers, now the CPI was on that list that we introduced this video with, the auto sales wasn't, but these two numbers are very strong, and they're definitely also industrial numbers. So that being said, they kind of canceled each other. And if we look at this chart here, this was made this morning, so it's, unless there's been a big move since we started this video, this is pretty much the range of where the euro has been in today since it started trading late yesterday evening. Now, if you look at that, like we just mentioned here, that the overall range for the past few weeks has been tight. This range here is ridiculous. We're looking at a 20 pip range. So there's not much of a move here for traders right now. So this is kind of a great play for if you're a directional trader, you're kind of sunk. You have to really wait for a move or a breakout from those pivots, I would say. Otherwise, I think you're going to get chopped up. For options traders, though, if you're trading kind of a neutral environment or against these pivots, I think then you have a really good shot over the next few sessions and probably going into the rest of the month. Are the dog days of summer here? It's kind of tough to say. The markets, we've had lots of news, and on this chart, it looks like there's a lot of activity. At least for a swing trader, you'd think, wow, this has been great opportunity over the past few months. And as for a currency trader, you like trends, and currency's trend. Looks like this market's had nice trend moves. But reality is, look at these ranges. Like I've highlighted these two pivots. This is a $1 range. Overall, over the past, since the end of May, excuse me, up until now, we have a range of just above $1.11 up to just above $1.14. That's a $3 range over the course of the last 2.5 months. But on any given day, if you look at these, they're only trading in basically a half, maybe sometimes even a 40 tick or 40 pip range. That's really tight. So it doesn't give a lot of move for directional traders, but it does give options traders a lot of potential. So right now, I think something to watch for if you're an indicator and a technical person is to watch volumes and volatility levels, and you can right now, I think, use this to your advantage for those types of trades. Like I said, directionally, look for trade the breakouts and definitely be careful with your risk, because right now, I think your risk reward ratios are off the table. So as far as this is concerned, is an indication for dollar weakness or strength. Dollar weakness has been prevailing over the past month and a half, and it looks like right now the euro US dollar is going to stay in this little range area. Only if we see a lot of dollar strength come back into the market would I see us taking out these lows, getting into this target range, and then actually making a run for this 111 area. That would probably not be the case because of the pressures that are in Washington right now and with the way the Fed is speaking. And then we have the numbers too. So I think that right now we have to just basically look at it as a neutral thing, unless there's, for instance, if the Fed does cut rates at the next meeting, as well as does some other type of quantitative easing type of strategies, kind of what's going on in the EU. So with that, let's go on to our next currency. We're looking at the US dollar Swiss. So this market also is kind of in a range-bound area. It's been in a downtrend for the past few months, and obviously it's been in an uptrend, upside corrective mode for almost a month here, and recently has settled into kind of a choppy range area. Now, we had a rejection of parity up by this upper pivot area, and then I have these two other pivot points here from this recent high and this recent low. And the reason I have these is where the overall trend is lower. So in order to set this into a neutral to higher trend, giving the bulls something to work with, we need to, one, take out this downward sloping resistance, and then also breach this higher here. Now, does that mean that we have a real big, strong dollar, and that's what's driving a move like that? That's probably what it would take to do that. To see the dollar fail with up at parity over here, that's why we're using this as our strong resistance band. So let's say we do have a big surge in bullish momentum and we do breach this line and take this out. I think that we can come into this area, but I don't know if we can actually get above parity. This was a big rejection here where the market looked like it was trying to turn. So it would take a close above here and sustain trading above parity to really reverse gears, in which case then we would have most likely an acknowledged turn in the US dollar Swiss trade. Problem with that is that we have this US dollar weakening pressures that are currently in the market environment. So that would most likely contain things. And that's why I think that with those pressures in place, that this current upside bullish trend, at most will have an exhaustion up into this level. A failure from this level down here confirms the bullish trend, and then that puts it down into this target range, and not much of an extreme either, because even if we do have prevailing dollar weakness right now, that does come into the market, how much is it going to be? I don't think that we can overall try to get a trend forced in the markets by Fed actions and things like that. I think that what will probably result is, since it's most likely factored in, is that we can see a slide into this lower target range, and just like we were rejected at parity, I don't think support in this market, as far as currency crosses against the dollar, can take much more of a beating. I think we are more likely going to start to see a range trade develop where we may see the upper boundary just below parity and this recent low down here by 97 cents be our parameters. And right now we're kind of set in the middle of that range, looking to bobble around for the next few weeks over into here. And that being said, is probably because with the US dollar focus, and I mentioned that there's a divergence in the major currencies. So as we get into the next two currencies, you're going to start to see why the Swiss is very important as far as a gauge for flight to quality and stability in currencies. And just for that reason alone, I think that this may become, over the next few months, a stability currency where a lot of people who are hedging other crosses against the dollar or what have you are going to start to run over into here as far as portfolios and things like that. So what does that mean? That means we're probably going to have a containment period somewhere between this 99.5 down into maybe right around this 98.16 area, which gives us about $1.50 range to chop around in until we have a uniform idea of the trend for the US dollar. So that being said, US dollar weakness push or even US dollar strength for whatever reason, I think is going to be contained in these parameters. So for trend traders, I think you're looking at look for opportunities to sell. I wouldn't try in this area right here. I think you're right in the middle. If you're a bull looking to get a leg up on a buy, I think you need to wait also to look for something down in this lower target range before you would start, or you look for a breakout here. And even now here, so the thing though is, let's say you get a breach of this 99.5. What's your expectations? You're looking at a rally up to parity, so you're only looking at a $0.50 move. What's your risk factor should you breach this area here? I don't think you're going to be able to have a fair risk reward ratio, so that's why I would say I would stay away from the trade. But for those risky short-term bulls, don't look for more expectations than parity. Look for it to only cross into this area. So if you're long already, this would be a great profit-taking area. I wouldn't try and directionally get into this trade right now. For options traders, I think that you can use this 99.5 and parity levels, and also basically 98.16, so 98 even as strike prices to trade different spreads against that. Because if we are in a digestive mode, as these other currencies are trying to figure out the tug of war with the dollar, see, like the reality is US dollar bulls, are they stopping the fight, or is it just a corrective phase we're heading into? We don't know yet. Then we have right now we're hanging on these Fed speeches, and then the crude oil number that I mentioned also. This is a big thing too. So if there is a continuing of the bullish trend in oil, that's another thing that I think we're going to have the US dollar Swiss become a currency where you need to be very careful about looking for major breakouts. I think it's going to be a stable currency for kind of as a hedge for that. Now here's where we see the divergence. So we saw the euro US dollar where we're possibly seeing where the we could see a little sell-off, weakening of the euro US dollar, but not much. And then we also saw where it's probably has a better chance of even getting a rally if a true US dollar weakening momentum occurs. But this goes with the opposite here. We have pound weakness that, unlike those other charts that, excuse me, had either bottomed recently and are settling up into a range trade, this thing has been just in a bearish trend and just severely getting beaten down. Every time it moves, you get these rallies. Some of them are nice moving days, but as a whole, they're very tough grinding higher. But when it sells off, then it has no problem dropping out. Like we had last week where we had slammed these new lows here, and then we had this little rally, and right off the bat this week, it just fell apart again. So now, is this because of anything to do with the pound and the US dollar? Well, yeah, right now we're banging 2-year lows. So no matter what, it's when you're getting to severe support or resistance like that, the trend is your friend, and it's tough to catch a falling knife, so you don't want to try and do that. Then we have all over the news the hasty EU exit pressures for the pound, meaning October 31st deadline. I find a lot of irony, though, in this little thought, though, that's coming out of the Eurozone, very much so over the past couple of days. I don't know how Brexit possibly could be a hasty exit since they've been dealing with this now for a couple of years. So to me, I found it rather ironic that was one of the biggest news releases coming out of Europe today. And then we have trade war fears again. So with the US president speaking yesterday about some potential new ideas about laying in a new policy on trade with the EU as well as with the UK. So just as if Britain didn't have enough to deal with, they have the inability to come to an agreement with the EU on how to leave, and it's not like they're leaving the planet or moving the island or anything. I mean, all they're doing is regaining their sovereignty. So I don't understand some of these little nuances, but no matter what, they all weigh heavy on the pound, and that's just the pound period versus any currency. So even if, which is counterintuitive to any ability to try and weaken the dollar right now, the question is, could you make the dollar more weak than the pound is? I don't know if we want that kind of a free-falling situation, and this is because of this trend is basically because of the inability to come to terms with a lot of geopolitical things. So what does this give us to trade on? Well, obviously the trend is your friend. If you're a bull, I would be very, very careful. As you can see, anytime you've had a bounce, you didn't have very much time to take a profit before it snapped back in your face. So I would really look for a solid signal. I mean, every day you can probably come down as it makes a new low, have a reason to buy it. But I think this pivot here at 125.58 is important, just like this yellow pivot here at 127.62. So I labeled this the neutral zone. Why the neutral zone? Well, we have a bulk of trading that's occurred over here, and when this market sold off severely, this area looked like it was the supporting zone where it looked like it was trying to hold up. Obviously, we made some newer lows. The question is, are we creating a base that we're setting the lower part of the range, or is this trend really going to just continue to drive the market lower for as far as the pound US dollar is concerned? So this is a divergence of currencies, and this is important for anyone that trades those currencies we talked about earlier, or any currency cross against the dollar especially. The euro, if it stays in like it's been in this $5 range for months, and let alone a $2-3 range over the past few months, If it stays in that kind of a trading range for the next month and a half, say, then that means that the euro, which is one of the major weights in the dollar index, is not wavering. It's just, it is where it is. It's kind of like a rock. It's almost like a buoy sitting there in the water, and it's not, it's bobbling around a little bit, but it's not moving. The pound, on the other hand, which is the second currency to be the biggest weights as far as the dollar index is concerned, it's completely falling apart. So that's where it becomes hard to use the dollar index as a gauge. See, we had over the past few months where most of the major currencies versus the dollar, not that they were identically trending, but they pretty much were in balance with the dollar. When the dollar became weak, they became strong, and vice versa. So they were trading in tandem, and now we have a divergence. So this is good trading opportunities for anyone that trades these different cross rates. So for instance, if you're trading the pound dollar and the euro dollar versus the US dollar, and then also the Swiss, you're looking at a trade zone where you can trade, there's a pyramid trade there. That's hopefully we'll be able to get into that in another webinar as the situation arises. But right now we have the beginning inklings of divergence. So what does that mean? If this truly is happening and we are hitting a divergence phase, then this means that this is not going to be a neutral range that's going to establish over the next couple months. We are not in the bottoming phase. If divergence truly is the call, then see how we have this steep downward sloping trend right here, then we probably will see this continue into not just into August, but into September and into the fall. And this also means that as these currencies diverge, it's going to set up lots of trading opportunities once corrective modes happen, meaning that all of a sudden the pound US dollar does get a bullish correction. I mean, it doesn't travel in a straight line, folks. Even here, even as harsh as and quick as it did get corrections. Now, the amplitude of these corrections is very tight, and that's something that concerns me, that it's, like I said, and a neutral phase is very possible, meaning that we can have these two pivots here, which would be great for options traders. Directionally, though, I think you would have to wait for a rally up into this area to look to sell the market. As far as buying the market, this is a really tough trade here. So I think that directionally, you're in a tough spot. Unless you're already short and working it, I would be careful of trying to sell it. You don't want to sell it in the hole. And it's definitely at an inflection point where with US dollar weakness, especially, if that was to happen, we could have a snappy trade with the pound US dollar. But the main thing is to realize that the pound is no longer trading in tandem. So it's going to take a severe reaction to, say, the numbers. Like, for instance, let's say that tomorrow with the jobless claims, they come out really, really off kilter. Would that mean that it's going to reverse the pound US dollar for that trend over the intermediate for weeks at a time or something like that? No, but should we have a big shakeup in jobless claims for that would offset, the current expectations, you could see a spike where you would see it. That's when you get a nice rally out of the pound US dollar. And the one thing that is nice about the pound is when you do catch a move, it radically moves. Like it trades in small ranges, but remember when we were talking about the euro US dollar, how it was only in a 40 tick or pip range. Right here, look at the pound. This chart here, these are not tiny ranges. So there is opportunity. You just have to be very careful of when you try and seize the opportunity. So once again, for bulls and bears, right now we've made a pattern of lower move lows and lower move highs. So look for that change. A breach of this level here at 125.58 would obviously mean a taking out of this high, which would mean a higher move high. Hopefully changing the trend at least to neutral and then giving a bullish setup opportunity. Before that, I think that as it comes towards this downward sloping resistance, and be very careful buying it because it's most likely going to snap back in your face. That's if the currency is truly diverging, and if that's the case, then we're looking at an overall trend move that will probably continue for the next few months. And since we have October 31st as a deadline, and also September 1st for a deadline for the EU and for the UK for certain things as far as they move towards a soft or hard Brexit, that's when we should see for sure a neutralizing of the trade as we come closer to those dates. So right now I think the trend is going to just continue into at least the September 1st deadline, and then maybe that's where we see the corrective move higher for a nice bounce in the pound US dollar that lasts for a few weeks. So for key numbers, it's nothing to the downside except for newer move lows. We're making 2-year lows. Don't try and catch a falling knife. And when the pound drops down, like you saw how it fell here in the beginning of May, I mean, look at this slide here. It was red, 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 red. And if we have one more slide like this, look at 131 down to 126, a $5 slide puts the pound down at like around 119, which would put it obviously below this area of the chart. And in which case, then this would obviously not have been a bottoming area for sure. This would become a target to shoot for eventually on the bounce for a corrective move. So yes, only a breach of this upward sloping line, and then obviously this 125 pivot puts it up into this neutral zone. And then, like I said, I would be careful. This is what I would say if you are long, if you're going to be risky and try and take a shot at that, and it does gravitate to this area, take profits here and look for selling opportunities. Otherwise, for options traders, I would say you can use these levels as, you know, key levels to trade against. Like right now, even if you get a rally, look at how does it rally. Rallies don't happen very long. So if there's certain bearish spreads you can put on, there's probably a good opportunity to last in those, even if it settles into a neutral trade. And then once we get a breakout, then you can look for bullish opportunities. So this is our divergence. The other currencies, like I said, have been trading in tandem when the dollar was weak and strong, and so was the pound. Now it is no longer doing that. So we're looking, that's definitely going to give us some opportunities for corrective moves and also indications of when other markets are going to potentially turn. So with that, let's go on to our next market. We have the Australian dollar, US dollar. Now, why are we looking at this one? This is one of our other major currency crosses against the dollar. Obviously in a different trade zone than the other ones, but it does give us a good indication about dollar strength and dollar weakness and what we were talking about before. Now, up until the past few months, you can see how the Australian dollar, US dollar has been getting hit for a while, trending lower. It bottomed in the middle of June and has been a corrective move higher. Now we're at a little inflection point. And this is kind of key because we made a slightly higher move high up here. We made a higher move low. And the question is it narrowing and going to go sideways? Very possible, as we are wondering what's going to happen with the US and China. However, right now, it's probably going to maintain this upward sloping bullish trend, which we have to look for right now. The trend is your friend. And the question is it going to breach and make higher new move highs, or is it going to go and test support right now? So right now, I would have to say that since the Aussie seems to have been in opposite mode for such a while, and now is meaning that it was going the opposite way versus the other currencies versus the dollar. So when the euro and the pound were, let's say, rallying against the dollar and leading the charge, and other currencies were, and the dollar was falling apart, it was doing well against the Australian dollar as well as the New Zealand dollar. So in which there was a big indifference and obviously divergence of those currencies. Then all of a sudden, the Australian dollar, US dollar currency cross started to move along with the other majors. And now we're looking at, just like we said, that we have divergence of the pound versus the euro, because the euro US dollar is pretty neutral. It's not looking like it wants to fall apart. Even if it starts to test support a little bit, it's not making 2-year lows or anything. It's not even making 2-month lows, let alone 2-week lows. So that's where we have that signal as far as dollar strength and dollar weakness. And this market right here is our other indicator. So we have the pound that's diverging, and now we have the Australian dollar, US dollar. Where am I talking about here? Target range up here. If we have this pivot here, we have 70.48, and we have 69.10 here. These are up and downside pivots. This is our target range right now. So if we have a rally that takes out this past high, and which would mean there's probably going to be a bunch of stops up here. So whether you're a futures or a Forex cash trader, you're probably going to see a spike above here if we can get a breach of that level. But that would also mean that we have Aussie strength and US dollar weakness. Main thing being, is it US dollar weakness, which is what we're looking for. That would mean that the US dollar, like I said, as far as with the Fed, like if these actions continue to push, then this trend higher is most likely going to happen. But right now we have the market that it failed to make a higher move high yesterday, and now it's trading lower. This is a pretty fresh chart, so unless the market rallied since this video started, this is pretty much where it's at. So is it just digesting the current trade, starting to set up a neutral trade? That's a good question. And I think that as the China trade war talks continue, and we don't know exactly where they're going yet, as that goes on, we're probably going to see more sideways than trending going on for the Australian US dollar. So this gives options traders a good potential to profit off of these levels, as well as opportunity for at least to know for the next few weeks where are we going. Right now, I think the target range here is where you're going to see the market chop around in. Right now, since we failed to make a higher move high, we're wondering, is it going to digest and make a run? And if not, since it looks like right now it was rejected, we have a short-term reversal bar from yesterday, meaning most likely we're going to test support for a little bit, which we are today. How severely? I don't think it's going to be too much because we have this upward sloping support line. And it's not a very steep line. So for the market over the next few sessions or into next week, for it to slide even down into this area and touch this line, it's not such a big deal. It's not really bearish, and it doesn't mean an overall rejection of this upper level right here. In fact, it would be kind of like a good situation for the market to slowly kind of just chop down into here and digest these news. Remember, we were talking about the Fed speeches. We have the oil number today. Today's oil number is big. If it comes out and we start to see a bullish move in oil, this is going to send the shock waves that I was talking about before, and that's why we had to get to these currencies so we can bring back to what's up with the oil and the Fed speeches. We know the Fed speeches are going to probably come in line with last week. Very transparent what's been going on with the current Fed over the past year and a half or so. What we don't know is that oil number this afternoon, and that might be why the currency market was pretty quiet, especially with the euro. Think about this. The pound US dollar is making 2-year lows, meaning pound weakness, dollar strength. Why is that nothing really shaking up in the euro? Why is it in such a tight range? So it means it's not dollar action that's happening. It's the pound that's getting all the action. So that being said, the US dollar, the petrodollar number, is hanging on this number. So for the next few hours, it's probably going to be a tough dog day of summer kind of trade. And then we'll see if the number comes out where it now if it's a bearish number, that changes everything, because then it gets US dollar strength. But a bullish number for oil, that's where you can start to see problems, because that would most likely indicate that we're going to start to see a slowdown for the third quarter and into the fourth quarter, which means that expectations for numbers are going to be probably good or lowered into September and October. And if we were to, let's say, sustain a trend higher and have oil like reaching up, let's say the 70 to 75 buck a barrel range this fall, and we have the potential with Iranian conflict to also help aid that type of trend move. Should that occur, that's definitely going to have an impact on the Australian dollar, because oil and commodities and also the economic engine of China that it relies on are all indicative on a major surge in oil. Also, what would happen is, think about this. We get a rally, let's say these crude oil stocks are the beginning of what starts to spark a bullish move in oil over the next month to 2 months. That's the kind of thing that's going to start to spark a currency move. You're going to have issues with the euro US dollar. That's where we might start to see it fall apart and hit support. Well, that means all of a sudden, no matter whether the Fed cuts rates or it does any type of even quantitative easing type of moves like the EU is already planning on doing and has done, it's not going to help. The dollar strength is going to come into play. Dollar strength means that this market here, Australian dollar, US dollar, obviously then at that point would be heading towards these lows. So that's something that we need to look out for. So right now, like I said, I think the target range here is the most likely area to see this currency settle into, and then look for it to maybe test this support line here and key off this oil number today. That will, like I said, most likely set a spark. Now, let's, for instance, say that the number comes out bearish oil. Well, then all bets are off, and then your bulls are probably going to come into play here, and the 70.48 is going to get breached, and we'll probably see higher move highs and a continuation of this bullish Australian dollar, US dollar trend. Now, as far as how far it would go on a target level, the overall trend is turning. So it would, like I said, if the number itself is bearish, that's good for a short-term play. If it's bullish, well, that's not good, because that means that the oil probably is starting to spark a new trend higher. But a short-term bearish move or news for the oil number would help to slow things down, and also means it's also good for the economy. The economy is globally. That would also help to support the Australian dollar, US dollar as well. So we're probably going to see, like I said, this target range trade in here. For bulls, look up here, and then also for bears, if you're looking for a great selling level, right now to right here would be your risk. So you're not risking very much to try and get a move at least down into this area, and then if it takes out this rising support line, especially if this failure here is maintained, well, then we're making a run for support down at 69.10 probably. So that for a nice little sell trade, there's probably a good potential for that. But then also, like I said, key off that number this afternoon. So up until now, for the next few hours, if you're not already in a trade, take this into account and maybe wait until this afternoon to get a signal, and then you'll have something to work on for the next few days. So with that being said, what else we covered here? There we go. We're going to wrap it up now. So remember to do your homework, look at the markets, weigh the potential trades, have a plan, and stay the course. Just like we looked at these markets today, we saw some potential opportunities. We also weighed the risks and realized that where we have some potential opportunities, it's not worth the risk. I'm Teddy Kekstadt from Forex Trading Unlocked. You can check me out all the time on www.forex-trading-unlocked.com. Please like, follow, and share us on Twitch and StockTwits. And if you like to learn more about where I get my analysis ideas and techniques, I wrote a book called High Probable Japanese Candlestick Patterns. It helps you utilize the best buy and sell patterns used for over 400 years. And you can use them in the Forex markets, the futures markets, options markets, all kinds of markets. And just like we were talking about the divergence of the pound US dollar and things like that, you can learn how to use correlation trades, and where you may be in one market and what's happening in the currency markets can give you a signal on how to trade your markets that you're using. So with that, thank you very much. You have a great day and take care.